My goodness, we have a lot of stuff going on in our markets today. I'm Marlin Bohling with you, and I'll try and be your tour guide to these ag commodities, but also on some of the other information that's going on as well. We'll take a look first here at the Dow Jones Industrial Average, kind of walk through some of these outside markets here. Still very strong. March futures on the Dow up 344 points at 34,815. Now it's about 140 points off of its earlier high this morning, but still pretty strong action over there. On the other hand, you look at the U.S. dollar index, and it's a little bit weaker. It's firming up off its earlier lows. March now 96 points lower, still above 96 at 96.260. The big headline grabber this morning was West Texas Intermediate crude, with March futures now down $4.62. That's a precipitous drop. It had a high of 95.17 overnight, and now we're at 90.84. And that, of course, can put some spillover pressure on the, related energy markets such as ethanol and biodiesel, and that means corn and soy oil. On March corn, we're down 15 1/4 right now at 640 1/2. December down 9 cents at 589 1/4 this morning. In the soybean trade, these quotes provided by Bar Chart are showing March 21 lower at 15.49 per bushel. On that new crop November contract here on the soybeans, right now we're currently trading at 14.31 1/4, and that is down 11 1/4 cents. If you look at the soybean oil trade through its biodiesel connection, you have the March futures down 105 points this morning at 64.76. All kinds of weakness in the wheat complex now after Russian troops backed away from the Ukrainian border. And my, oh my, that was providing a lot of background support, apparently, because now March Chicago wheat down 22 1/2 at 776 3/4. And you have that July contract down 21 1/4. Kansas City March down 27 1/4 at 801 1/4. Actually dipped down below $8 there momentarily today. The July down 26 1/4. Minneapolis March down 21 1/4 at 944 3/4. July down 20 3/4. Let's bring in Chris Swift of Swift Trading in Nashville. Boy, I tell you what, that is a lot of negative signs on everything but the Dow for the moment. What is happening here, Chris? And is this a sign of a major turn in the market or not?
Well, I think it's kind of a reflection, excuse me, of how all markets are intertwined with one another. Feed cost versus the livestock, and we've seen the livestock up, and I know we'll touch on that in just a second. But in all, really, I look at this as probably just a cooling off time. Although the Ukrainian situation probably exaggerated a lot of the price movement, once it goes away, they're going to start trading off of something else. So the one thing that I can tell you is there seemingly is no great encouragement to increase production of anything, nor a high enough price to quell demand for anything.
Now, we did have some overnight export sales news that came out this morning, and against the backdrop of all this other stuff going on, we had another sale of soybeans, and yet it's not helping the market at all. It was a sale of just barely over 100,000 tons of soybeans. They went to Mexico this time, and it was kind of a split delivery order. Nearly half of it was for the current marketing year. The other half was for a year out from now. Just wanted to point that out. So 101,000 tons were sold overnight, and yet we have beans down about 20 cents as we speak. Chris, we'll come back in a moment. I want to get your expertise on our cattle market, and we'll talk about that right after this. Well, as promised, let's go take a look at our livestock trade. Let's go to live cattle futures right now, and on the big board, we have plus signs to talk about. And we have the April live cattle currently 42 higher. We're at 146.77, and it's off of its earlier high of the day by roughly 70 cents. It's actually within about 40 cents of its low of the day. So it is still hanging on to decent gains, but well off of where it had been. Meanwhile, in the feeder cattle market, it's quieting down too. March is still up $1.32 at 168.20, but if you recall, when we looked at this earlier, it actually was over $2 higher. Now, April feeders are currently 90 cents higher at 172.40. So all the early enthusiasm is kind of wearing thin the way it looks. Meanwhile, lean hogs, April now up $1.17 at 103.50 this morning. In May, up half a dollar at 107 even. Well, let's go back to Chris Swift and talk about all this on the cattle market here. It looked very strong. It was flexing some muscle early in the trading day, but kind of getting a little bit weaker now. Chris, what's happening?
I think we're just pausing here. There's not a great deal of increasing consumer demand at this level. As we see more and more people get over the COVID, they go back to work, and that's going to increase our packing capabilities a little bit. But yet we've still got lots of cattle on feed, and after we've seen more and more cattle placed due to the drought, it's just going to be kind of a little bit more difficult to work through than what we might have thought 6 weeks ago.
You know, you and I have talked in the past about the rise and fall of the equity markets and the financial markets and what that would do to the money flow into our ag commodities. How has that affected the investment money on the livestock sector here?
You know, I can't really answer that. I don't know, just to be perfectly honest. But what I can tell you is that the cattle cycle has changed to a point where we're not going to get any increase of inventory over the next 2 to 4 years. And the drought aspect is so crucial that within 2 to 3 months, if we don't have any kind of pasture recovery, more cattle are going to come onto the on feed, or more cows will be slaughtered. So this drought has got so many different impacts to it, both grain-wise and livestock, that we need this 4 to 6 weeks worth of time frame to get closer to where we can see whether or not the drought's going to be broken.
I noticed on the beef cutout values that came out yesterday from USDA, the market had turned mixed, and so maybe we have kind of found a point of equilibrium here. On the choice cuts yesterday afternoon, they were down 56 points, or 56 cents rather, at 273.96. If you look at the select cuts yesterday, they were 92 cents higher, and they were at 268.75. So that spread narrowing up between the two, it now stands at $5.21. So just wanted to throw that out there as far as any potential impact on cash markets. Well, thank you, Chris, for joining us. Exciting day to talk about things. Chris Swift of Swift Trading in Nashville. Tammy, back to you.